Hey traders, Nick Shaheen here, recapping the week, closing out the month of January. Unfortunately, the week ended on a bad day of Friday. Shameful way to end the week because we had a lot of positive things happen this week. The scoreboard for today is minus 1.45% on the Dow, minus 1.3% on the SPX. Nasdaq fared best, minus 0.8%. Small caps fared worst at minus point 2 point over 2% down. So yes, it's ugly. Yes, it could have been uglier, but it's a shameful way to end a week because we've had so many good things happen. Okay, what did we have happen that's good? We had major corporations, the largest corporation, deliver awesome numbers as far as earnings are concerned. Google delivered, of course, I'm talking about Apple. Google up almost 5% at one point, over 5% today. Amazon up over 14% at one point today. Twitter up today. MasterCard up today. Visa up big today. Yes, some financial engineering there, but who cares? So we had a lot of positive things happen this week, and which probably should have, we should have ended the month better, but we've had a few things that kept a lid on things. So mainly a runaway bond market that's out of control. This is crude. It's been meandering around here. It scared the heck out of us yesterday, $43 and change, and then today it created a problem for the market, and I'll tell you why. Listen to this setup right here. Whoops, I needed to zoom in one point. Okay, this right here is the ES, and that's the S&P. And throughout the day, we were meandering okay, and then right around here, there was a rumor about crude, and look at the rocket ship that crude went. It went up over 10% in no time, and then gave it up because of people figured out it was a rumor. So here's what happened with the markets. The markets went, what? And then whoosh, they fake. It was a fake rally, but unfortunately created a void that brought us down fast to where we hit that bounce level too fast to catch it, and then ended up whooshing down. And the biggest contributor there was Apple. Yes, it was down 1.45% or something like that. It's not a loser company, it just had a bad day at the end. So it was bouncing on the floorboard, and finally at exactly the same point, matches up with this point right here, the board breaks and Apple goes from 118.7 down all the way to 117.7 real quick, and then broke 117 for a second. Does that mean people are going to sell Apple? No, 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 no. We have more love for Apple than haters, so Apple is going to be just fine. Google is just going to be just fine. Microsoft, it got hammered and killed. Here's the summary event of all of this. Okay, if I were to summarize the week, scoreboard, awful way to end the week, but positive things happened this week which provide support for next week, meaning Apple, Google, Amazon, all these good companies that are in favor now will stabilize. And then all the companies that have been hit, like Microsoft, down like 14% or something like that, it's been punished enough to where it's not going to drop another 14%, maybe, most likely. That's a pretty heavy weight. So that's just as an example. Alibaba got hammered, but now it should find support. There should be more buyers closer to the closer it gets to its IPO price. And so, left alone, no headlines into next week. So we should be able to try to stabilize the market. So the scoreboard, yes, red on the week, and we'll look at those. Monday, should we be left alone without headlines, and should crude hold up, and should everything today hold up the way it is, even with the breakouts in this and breakouts in that, we should be able to stabilize on Monday without any headlines. Now, we should be able to build strength on the backs of Apple and Google and company. And so best case scenario is we should hope for a meander next week so we can build some stabilization and solidify a little bit. Today, I was nervous midway through the day. What if we close badly like we did 2 days ago? Guess what? It happened. If I'm thinking about it, other traders are thinking about it. So, and everybody's hesitating. It's like a self-fulfilling prophecy. All right. So then, iron condors might work the best for active traders. Meaning, I try to range bound the market. So if I do SPX spreads, I try to sell some risk down below and some risk up above, and play the range. I have my own ranges. You should get your own ranges. If not, join me. So what do I have as far as worries? Worries, I have the VIX. I worry about the VIX next week. Why? Because the VIX is in breakout area. Today it almost broke out. This is not a scientific line. I can tell you that the range is tightening, and when something tightens that much to a point, it's going to have to release energy up or down. So it either reverts back down to the low 15s or 14s, or it's going to reach for this box. If it reaches for this box, there's more red in the markets. Today it almost closed above it. I'm glad to see it close below it. That's worry number one. TLT, worry number two. TLT represents the bonds. They're in super breakout mode. Bonds go up, markets go down. That's the way it is. And if one green light, at the end of the tunnel, if I go to 10 years, top, here we are at it. Will it be another top, or would it break out? If it breaks out, it might have more. It means markets are in trouble. So that's another worry, kind of, and also light at the end of the tunnel surprise help to the market next week. The yen is in breakout mode, but it's under control, meaning it reaches a level and then drops back down exactly in time for not in the break markets, because if the yen goes up, stocks tend to come down most often. So last thing we want to hear is more QE from Japan over the weekend. That's another worry. Okay, so this is the global picture. Well, what's a trader to do? The active trader should try to scalp premium and try to range bound. If you can do either sell premium and range bound and have them expire worthless, or buy premium on momentum at the right time. I prefer selling the premium because I know how to do it. I have better luck to it that way. Slower traders might even sit the week out, or do long-term trades in names that are worthy, meaning Apple, we know it's in favor. Long-term, they're going to make money, period. So I go out in time, buy a leap, buy the stock itself, however I want to do it. Google, over time, they're going to make money. Same thing. Alibaba, I'll buy it on dips. The closer it is to its IPO price, in my opinion, there'll be more likely buyers than sellers. The only caveat on Alibaba is that it has a lockup expiring in March. Not expiring, coming into play in March. So you better do some homework there. I'm not that worried about it long term. If there's a lockup issue, it'll be temporary. So this is how I would trade next week. As far as levels, if you want to see it in print, here's the SPY. Yes, it's a red week, but we're still trying to meander in this area. And as long as we're holding this area, I'm okay. I didn't like the fact that we closed on the low. It's not as low as a couple weeks ago, and it's not as low as this funky here, but it's still a low, and nobody wants to see that. All right. So the Qs, let's see on the Qs. Volume, by the way, is a little bigger than last week, and anytime now. Here are the Qs, also red, also not as low, about the same makeup. So we're going sideways. Sideways is good for me because I sell spreads. All right, how about the small caps, which are usually often said they're the canaries in the coal mine? Yes, higher high, that's good, but the low is terrible. But still, not as low as the other two. We did not put in new lows, so to speak, and that's encouraging. However, we're still vulnerable. So now the small caps might be the canary in the coal mine because they're not as affected by the big guys. So this is the S&P 100, for example. You can see how big of a box Apple is. Microsoft had a 4% down day, so you can imagine its effect on it. On the whole, Google if it offset that effect, I'm sure Visa, MasterCard as well, Amazon as well. But the small caps, it's a whole bunch of little companies. One is hard to move. One will be very hard for one to move the whole index. Now, healthcare, if healthcare is super green, for example, or super red, yes. Energy, yes, but not one company, okay? So NASDAQ, it's even worse. Microsoft, Apple is like 15% of the NASDAQ. This guy is probably 8% together. This one is probably 8% together. So the weakness today, if you want to say it's down almost 4% on Microsoft, that probably accounts for about 0.3% of the 0.79% down on the whole index. Okay, so you have to take it with a grain of salt. Don't trade the headlines. Trade what you know. Trade your ranges, established ranges. Okay, something else somebody asked me, okay, what about put to call ratio? Put to call ratio today in the SPX was disappointing. And they said, well, I looked at it as about 2.5 puts to a call. Yes, that insinuates that there are more buyers of doom than exuberance. Obviously, they're buying more puts. But when I also look at the open interest for next week and the week after, they put their money higher. They want to put their money between 200 and on the SPY, above 200 and under 205. So the range is higher than currently, at or higher. So if I have that position and I'm a little worried, I'll buy puts. So all that put to call ratio tells me is that there's nervousness in the market. And guess what? I look over at the VIX and ta-da, yes, there is nervousness. The VIX is up 11% today. So that makes sense. High VIX equals nervousness. Not too nervous for me to sell and liquidate my positions. I still want to put my positions in where I think the market is going to be. But just in case, I'll buy some protection. Therefore, people buy puts. So buying puts is not necessarily bearish. It can actually be sometimes bullish because in scenarios where they're just buying protection instead of selling. That's it. Nick signing out.